Hi, everyone. It's my pleasure to host this amazing group of people, have a deep discussion on the future of DeFi, CeFi, institutions, where this all goes. Somebody sent me this today. Man survives bank failure crisis by not having any money in the first place. So, you know, in case of doubt, that always saves you in DeFi, I guess. My name is FELIX MAGO. As the moderator said, I'm the founder of Dash Next, which is the Asian part, which in the decentralized Dash network. That was the first DAO in the world, the first Bitcoin fork, digital cash. We built payment ecosystems all around the world for a very long time. I lost my sleep in DeFi in 2018 or 19, I believe, when Sushi and all these amazing protocols started. Now I'm building a metaverse. We have a venture builder. So I don't sleep and doing too many things. I'm happy to be here with you. Maybe we do a quick intro round.
Sure.
You go ahead.
Yep, happy to kick things off. My name is ALIYA GUPTA. I lead business development at Sygnum Bank in Switzerland. We are also based in Singapore and very recently also now in Abu Dhabi. We are the world's first digital asset bank, bridging the worlds of traditional finance and all the exciting developments in DeFi. So happy to be here today, and thank you.
Thank you.
Hi, everyone. Thanks for listening today. It's quite exciting to be here. My name is ANDRÉ. I'm a partner at Modus Capital. I spearhead the investments in Africa, so we focus on deploying in startups that are Web 2, leveraging Web 3 technologies.
Good afternoon. My name is FRANCOIS. I work for Investcorp, based in Abu Dhabi, where I manage a blockchain fund. Also, of course, investing in Web3 and DeFi. Previously, I worked 20 years in the banking industry, so work more on the institutional flow and the use of DeFi. Thank you.
Hi, everyone. Kevin SOLTANI. I'm owner of GIMA Group. We're an alternative investment company out of Los Angeles. Our newest project, which is exciting for the purpose of this panel, is the DeFi protocol, Mintrest, mintrest.com. We'll get into the fun stuff that we're kind of innovating in the space.
Thank you. Kevin, DeFi is dead. Why are we even sitting here?
DeFi is dead, huh? I mean, so is everything else at one point or another, right? We've heard this like 10 times out of every part of the industry, but DeFi's got its butt kicked, I would say, because look, how many percentage of the people that are crypto traders, users, enthusiasts actually know what DeFi is? Like, how many of them actually have gone out and educated themselves or been educated on what DeFi can do for their money? You rarely ask, you know, where's my money and what is it doing for me? I think DeFi solves a lot of that or answers some of those questions in the crypto space. At Mintrest, we kind of separate ourselves from the pack. Our friends over there at ALIYA and Compound have made a killing and done really well, not doing much with the fees as it pertains to the retail investors. So what Mintrest does is very quickly, in a nutshell, it captures the fees and redistributes them as rewards in the MNT token. So the problem in DeFi is that usually, or mostly, as TVL goes up and as market caps go up, that doesn't mean the token value goes up. And so who is it good for at the end of the day, right? You're getting your percentages, you're doing really well as TVLs are going up, great. How about when it's not? How about when everything is pretty stagnant? Market caps might still be going up, TVL might be, you know, up and down, but token value starts to tank. And so after the statistics coming out, which you guys have all seen more recently, 500-600 billions of dollars from ALIYA and Compound, respectively, have been just in fees. And none of that has been for the benefit of the retail side at all, and none of that is being captured for the good of the token value. So that's exactly the quick 60 seconds of what Mintrest does differently. We capture fees and redistribute them back as rewards. We have an amazing dashboard that can also help you with risk mitigation and boosting of your percentages. As TVLs, again, go up, you get to participate in that whole environment. So we're really excited about it. Take a look at us. It's about 10 days old. Private sale, not $1 of marketing, not $1 of listing. So we're doing things very reverse engineering the idea of DeFi here. So we're really excited about that.
Fantastic. I mean, we've seen a lot of trouble these last months with the Silicon Valley Bank. Obviously, a lot of other projects have failed this year. FTX, Celsius, kind of we are still in a hard valley that we are walking through. The bear market, one thing I always realize is when the yields are gone, the users are gone. So I guess you guys are working despite all this trouble and just keep building. So what are you investing right now? What is the tip for users to deal with this environment?
Yeah, I think I'd like to add or to emphasize is even if you have the ups and downs like in DeFi, so especially on terms of adoption for the retail that may just like slow down a bit. Very interesting to see what institutional are doing, and you can see the rise of adoption also for them. So we saw like different example, be it JP Morgan / DBS, SBI Holdings, like so using DeFi for it, but also Société Générale Forge partnering with MakerDAO. So we see more and more, for good reason, is like the tech really brings something there and solve issues, which is true for an individual, for retail investors, but it's definitely true for also for institutional. So on our side, so we look at those opportunities. So ideally, what can we do right now with DeFi that was not possible before? And you have overlap between DeFi and some use cases, could be Web3, for instance, or pure DeFi, like a financial product.
I was going to say, it's interesting to hear you say about what institutionals are going to do, because that's going to create a lot of catalysts in the ecosystem. But what we're looking at, and I think if we look back in the last year, what's been happening with the FTX and whatnot, we're really focusing, especially for our DeFi investments, we're really focusing on kind of the fundamentals when it comes down to compliance. We want to make sure that we back good projects that are compliant, whether they have a KYT, KYC structure in place to avoid these issues of governance, to avoid these issues of money laundering and becoming, again, in the headline. So we're kind of stepping back, looking at the fundamentals around that, and obviously other key fundamentals, unit economics, backing real projects, and making that impact.
ALIYA, we had just had a pre-conversation where you were pointing out already you're based in Switzerland. I guess that's a trust-generating factor in general, but it's also a factor of kind of a safe banking system. Honestly, it's an amazing regulatory environment, which I mean, the crypto environment keeps changing so fast. I feel Switzerland is somewhat like a rock that is pretty steady, not like jumping one day from this, another day to this. So how do you see kind of this gap between DeFi, CeFi? How do you position yourself in there?
Yeah, I think it's a really interesting time because, as you said, I think all the big institutions are still very much in the space. Maybe the conversation around it has come down a little bit in the bear market. They're a little bit less ready to sort of market it as heavily, but everyone is still working on it. But typically what all these larger banks are doing is coming at it from the tokenization side, tokenization of bonds, tokenizations of assets. But at Sygnum, what we're really exploring further is looking at what exists today in DeFi and how we can sort of create rails of compliance into that space. So taking kind of the power of DeFi, all these very composable money Legos, and bringing that sort of flexibility into a world that is still compliant. Because I think fundamentally, nobody wants to be working with a counterparty that is a North Korean hacker, or someone who may be a blacklisted wallet. Like, I think fundamentally nobody wants that. But then how do you still enable engagement with a space that has that flexibility, has that openness, but still knowing to some extent your counterparty has been vetted by someone somewhere? And I think that's the space that Sygnum is trying to sort of create for the growth of DeFi.
But I mean, your answer basically is to say because we're in Switzerland, you can you have some factor to trust us, right? That's like one answer you give? Is that,
that's one of it, right? But
correct?
I don't think it should be only Sygnum, right? Like, we're creating the rails, we're creating the ecosystem, but it is really about engaging with other banks, other regulators, any other counterparty that is maybe from an FATF regulated country as well, banks in those areas, and bringing them all in to create an ecosystem that is safe. And I put that in quotes because, of course, you can never be 100%, but to create something where at least more regulated or more easy to know than traditional finance today.
I could give also an example. I think we see the same trend that from a public blockchain, we start to see a private permission blockchain and a need for corporates or financial institutions to adapt a bit, keeping the technology, but put another layer to know so who we're dealing with. exactly same things happening now with DeFi. For search entities to be capable to use DeFi, they also need to know the counterparties, and they could bring all the counterparties, even themselves. If you're talking about a liquidity pool, they could bring their own client, helping like for this to just using the DeFi technology for it to be automatized. But that's really a need, I believe, and is getting there. We saw example with AYOTTE, which are also permissioning like access to its protocol. And that's the way that will facilitate and increase the adoption for sure.
So yeah, absolutely. AAVE Arc is one of the examples that we were looking at, and even maybe Paraswap Hub, where you can decide which counterparties you want to work with. But I think fundamentally, Paraswap and AAVE themselves are DAOs, or are largely unregulated players in the market. And so it really has to be led by players that are already trusted to some extent by the regulators, by the people, and by the people engaging with the space as well.
And you need to know the counterparty as well, because I think, I mean, again, like, is that one of the value proposition of DeFi is decentralized also from the team. But when you a corporate, well, you need to know, which door you can knock off if there is a problem. So.
Yeah, no, I was just going to say, like, this is where the, DeFi, CeFi, CDeFi comes in, right? The banks, which are going to come in some sense of the word in the next decade. What they're going to do with DeFi looks like a solution in America, at least, where they used to give a certificate of deposits up to 5, if you're lucky, 8%, right? That was able to pull money out of the boomers' savings accounts and park it somewhere else. Well, here comes a new generation where they have a beautiful DeFi product in the hundreds of percents, and they're more excited about it. It's decentralized. So what is the banking solution? It's going to look like a centralized, decentralized model where they're going to offer a solution. They're going to find a way to pool some of the money and move it into different buckets. I don't know, CDeFi, whatever you want to call it, but that's the best thing I can think of, is that it's still centralized. It's going to be regulated. It's going to have all of the fiduciary duties of what the bank offers to their clients. However, it's still going to be a decentralized model where, at least in America, a 0.001 rate savings account is not doing anything for me to keep money in, negative interest rates in Europe and otherwise. So I'd like to believe that the banks are coming. We don't know when and how, and I guess with regulation we'll find that out. But when I hear what just happened in the last 60 seconds there, that's all I could think of, is that they are going to come, they are going to give a solution for the last boomer generation to park their money and take away some of this new, we'll call it Web3 money,
Yeah, it's very interesting. It's great, actually, that you don't need me as a moderator. That's actually the best part about this panel.
You're just part of the crew, man. You're just part of the crew.
I like that. I mean, we identified kind of the counter risk, and like, there's a few other things I'm trying to keep my head around in these last months, right? I mean, we have seen, Circle is going, bust. USDC was the one thing where we always like laughed in our little fist to say, yeah, I'm not using USDT, and then suddenly USDC was like at what, 89 cents on the dollar, which was, I got a few panic calls that day. I don't know how about you, when suddenly you realize, oh damn, my treasury is kind of at stake here. Were you impacted at all, Andre, with that? What do you think about that, and how can you mitigate that risk?
The big picture, especially with stable coins, is that everybody says, okay, at least stable coins are stable, and that would just prove that it's not. But we have to be careful, especially in where we invest, which is in Africa. Stable coins are a necessity for remittance, for like low-cost transactions, and it's there to stay for sure. But what's challenging with what happened is especially the perception from an institutional perspective. When you approach an institutional investor and you say, the argument is that, well, stable coins, even though backed by fiat, it's now unstable. Again, you're back to the education perspective with those investors. So yeah, it's been a hard year for that.
You lead me to another question from the education perspective. I mean, I'm in this space for really a long time, and I've seen so many people say we have to educate. I strongly believe, actually, if you have to educate anybody on what you do, you probably have you have built a failed product that is just, not the right fit. So, it leads me kind of to think about UX, UI, better options. I mean, I loved, sitting in front of DeFi because it felt for me like a computer game, and I'm a nerd, I like it, but I wouldn't, recommend to anyone to use to use
No.
even MetaMask, right? So kind of I'm wrapping my head a lot around how can you build Web 2.5 solutions which have a good interface and which are half custodial, semi-custodial, non-custodial, log in with my email address, give me a secure wallet with mitigated counterparty risk, and like how are you guys approaching that?
I think that comes back to his point that you may still need to centralize somehow just to facilitate the experience.
Yeah.
100% agree with you, like the UX UI now is terrible. And if you're not like a financially savvy, tech savvy stuff, I mean, even us can admit and being knowledgeable is not that easy. So for normal average users, and then it may just drive toward like mistakes, is higher fees, so you cannot really reap all the benefits.
I agree.
I see two things to your question, though. I guess two segments. The one is the investor side, and the other one is the user side. Again, where we invest, people adopt blockchain and crypto like no other regions in the world. And it's really easy for them because the problem that it solves is so massive that they adopt and they adapt quite quickly. On the other side, though, again, back to the institutional investors, those are the ones that need educating. We don't need to educate the masses where we invest in like, this is a good product, because sometimes they don't even see the crypto or the blockchain aspect to it. It's a flawless user experience, and it's solving a problem. So anyways, I just want to differentiate between the two.
Yeah, that's true. Payne is doing a lot of user education. Do you have UI, UX experts working with you? How does it look like? How do you approach that?
We have to have that, right? So as everyone also has said, that working with DeFi today is still a really challenging experience. I mean, an example I give is that, honestly, if I died tomorrow, there's no way my husband would ever be able to access my crypto portfolio. I've given him a tutorial, I've said these are the seed phrase, this is how it works, and we've walked through the whole process, but I don't expect him to ever be able to do it. So a lot of the time, the clients we get at the bank are in fact saying, look, I've got some of my wealth in crypto now, but I'm scared that my wife or my kids won't be able to access it if something happens to me. So I think one of the main things on the CDFI story is bringing together or creating some kind of fail-safe or fallback solution to accessing DeFi wallets and so on. And I think today when we're talking about account abstraction, and even Vitalik's blog post a couple of days ago was about how to create this social security net for your wallet. And this continues, I think, to be a really scary point, right? Like losing your seed phrase or losing access to your wallet means you've lost all your wealth. And that's, I think, not something anyone can ever realistically put their life savings into. That's always going to be a blocker.
I agree. I'm actually working with a company called Tato. I'm a partner with them. They're fully regulated in Singapore, Hong Kong, Europe is coming, US is a bit of a nut to crack. But I can recommend you to kind of look into that. It's a custodial wallet, regulated, where you log in with an email address, the magic happens in the background. In a way, it's the kind of a Gnosis competitor, which actually brings a third level of the investor side.
But Gnosis is non-custodial.
Say again?
Gnosis is non-custodial. And for anything that is custodial, you're taking on that counterparty risk, and that is a centralization vector. If you're talking about DeFi, you have to be able to control your own keys, right?
It's regulated, but in a way that you can kind of as a multi-sig regulator, right? There's new approaches to kind of deal with that situation. You brought up an interesting argument saying it's an investor argument, it's a user argument, it's also kind of an argument from the company building side of things. I realized working with Gnosis that we always need 3 days to pay our people because the process is so safe that it always makes us a headache, like every single time, right? It needs time.
Yeah.
Somebody's sitting in the plane. You need to multi-sig stuff. It's like, it's
But
good that we are coming with better
well,
solutions.
I believe even in a pure DeFi decentralized way, still the community is trying to solve those issues.
Yeah.
So you see from the layer 2 protocols that now we see layer 3 protocol, which is aggregators to optimize, which will be like the best strategy between those different protocols. So even talking pure DeFi, it's just getting there to help in terms of usability.
Yeah.
You brought up a good point about UX, UI, but UX, I think, it was a game, right? If you remember Harmony One's DeFi Kingdoms, I've said this many times. I thought it really broke a lot of barriers to get non-traditional DeFi users in. It was a game, not much of a game, but it was useful because I think the UX broke down the idea of like how difficult it is to educate someone about DeFi. It had so many different layers. It was a game in the aspect that it had druids and docks and ports, but then what did they do? They partnered with Avalanche to create a new crystal token just by taking a boat over to a new island, right? So there's a way to gamify the user experience. Now that didn't do anything for the education side, right? No one knew what the hell they were doing. They just knew that they were just clicking buttons and making money, right? And then that all breaks down as volumes start to break down and TVL disappears. But then on the flip side, really, this is where, just to plug it really quickly about what we've done. Just look on the website about beautiful dashboard. If you don't like our dashboard, our product's not for you. And what we did is we took DeFi and we made a product out of it. What did AVE and Compound do? Right? Is it a product? Right? It's a product in the sense of the DeFi solution, but can it be turned into an app? Can you walk around the streets and say, hey guys, this is my TVL or this is the percentage? No, right? You're not excited about it. I think that's what we changed is like now we have a dashboard showing you the risk mitigation, showing you what you can earn, everything all in beautiful little concept because I think it needs to become a product for that user experience or the UI side so that it looks nice. And I think that that's where DeFi protocols have not necessarily failed, but they're not innovating. Right? It's there, it's doing great, but I'd like to see people get excited about DeFi the same way they get excited about stocks. The same way they go around to their buddies, even young 19-year-olds, 20-year-olds saying, look at my GameStop stock on my Robinhood, right? That was exciting for them. What that happened was it created so much financial literacy. We can laugh about the GameStop and the AMC, short squeezing, but what did that do for financial literacy? You got young people, highly intelligent now in financial, literacy, showing off their stocks and stuff. This is amazing. I'd like to see that happen with the crypto bros, right? With the crypto youngins or the Web3 enthusiasts in DeFi.
Yeah, I love it. Guys, we have to keep it in time. It's running fast. We have so many people. I would like to end up with two things that are going a bit into the future of DeFi. So let's do really a quick round and like to get your kind of 1-2 sentence opinion on it. The first one is, like, where's DeFi going? We saw kind of NFTs coming into the mix. The second one is there's so many different layers, different protocols. I have to switch my MetaMask to like, I don't know, 25 different networks probably by now. So would like to kind of pick your brain on that. What do you think on NFTs entering DeFi and what's next?
I mean, I can't really speak to the NFT role in DeFi so much yet. I think it's a really good tool for aggregating wallets to a single address, for example. I think that's one really interesting use case where NFTs can play a role. But to your point, I think having this many different chains with all the liquidity then being fragmented across different sorts of layers, even within specific chains, is one of the problems I think we'll see 2023 solve. But currently it's not, I think, completely, we don't really have a solution for it yet. You see lots of things happening on Polygon, lots of things happening on Arbitrum and Optimism, but fundamentally all of this is now separated pools of liquidity, and that takes away from the overarching DeFi experience. And so how this sort of is able to get bridged back together into something that we can still use and still optimize on is something we'll see, I think, this year.
Fantastic. ANDRÉ, what do you think is driving the next bull?
What we're looking at is a lot of compliance in the DeFi protocols, just to be able to make sure it's a clean system. So that's the one thing. The second thing is it actually delivering value for the investors, for the off-takers? So to your question about NFT, I think there's a place, but is it actually creating value or adding us something more than just the three letters that people get so excited about? So yeah.
Good point. HERVÉ, what do you think?
I think first, like to keep both like retail and more institutional going forward, enabling like both custodial and non-custodial approach to DeFi. I believe we will see more and more like derivatives as well, what we see in traditional market. That will be reflected or represented like under like DeFi, and then will help something a bit more complex to adapt. But also just for simple things. I'm looking forward to see ultimately a mass adoption even in Africa, for instance, where you can see microloans, so giving access to financial product to the masses. And then that's where like adoption will really raise when people don't even know ultimately it's working with DeFi, but they just get access to cheap loan or cheaper loan than what they can get in their country, or for investors getting a higher yield, because at the end of the day, that's what we're after.
More institutions jumping in, adopting it will create more obvious adoption, which will drive up TVLs. So this is all good for DeFi. I think 2024, end of 24-25 will end up being the year of DeFi. I don't really care what happens to the crypto markets as a whole, but I do think it's becoming more sophisticated, quicker, faster, stronger. I think there's better products being built. As for the NFT argument, I think that there's great utility if in staking, for the purposes of the DeFi, and I think that boosting, right, giving incentives, giving rewards based off those NFTs will more drive utility to whatever NFTs. It can be an ape or otherwise, but giving the NFTs the opportunity to grow and work within the ecosystem is definitely around, and I think that's exciting.
And maybe just one more point. I blanked when you asked me at the time, but of course, the identity NFT story, right? Like having soul-bound NFTs that are essentially identity credentials that can be verified with zero-knowledge proofs. I mean, that is the future. That is what we are looking forward to, hopefully this year, but probably next.
Love it. I wonder, nobody of you has mentioned one thing that kind of makes me very excited these days is like all the AI part. I had at least 3 discussions yesterday on, how much better will a machine trade, build bots, arbitrage between the different chains. It's like an insane level of excitement that I have here, and insane, like,
you were
dangerously.
You were an arbitrage trader back in the day, weren't you? For sure. I don't know, I'm asking.
I mean, I'm an opportunist for whatever comes along, and that's the beauty about DeFi, right? Because one thing I've learned about DeFi, you don't know what's up next month in DeFi. So with that, thank you so much for joining the panel. Thank you so much for listening, guys.